This is Moe Agostino, Chief Commodity Strategist with Farms.com Risk Management. Welcome to the 2020 5th Annual Great Ontario Yield Tour final virtual event. We're going to take 15 minutes to do a quick presentation on the 2020-21 U.S. and global soybean market outlook at September 2nd, 2020. We're going to start off with the global picture, then look at the U.S., and then look at Ontario. Global soybean ending stocks have been trending lower the last couple of years. This year will depend largely upon whether the USDA continues to lower the production acres and yield in the U.S. We had a derecho storm. We had some dry weather. We haven't had a very good finish for the soybean crop, unlike in Ontario. And so that this global number will depend on how large that U.S. crop is. We've had this derecho storm that was 500 miles long, 100 miles wide. The best estimate on destruction or production damage is about 100 million bushels. So a dry August and very little moisture from hurricanes Marco and Lower are going to equate to lower yields. In 2012, Hurricane Isaac came in and blanketed the U.S. Midwest with 1 to 3 inches of rain or moisture. So that helped make that crop in 2012, which was a very dry year. But this year, unfortunately, there were lots of hopes that either Marco or Laura would blanket the U.S. Midwest with some moisture, but it clipped the eastern part of the United States and the lower Ohio Valley. And over the next 7 days, it looks dry. So look for crop conditions to continue to come in lower as they did yesterday. Iowa in a drought similar to 2012 with 61%. Moderate drought and 29% severe. I think many private analysts, including the USDA, are underestimating the production loss from Iowa. US dollar index remains in a downward sloping downtrend, very supportive of higher US exports as we go into an election year. I think Trump wants to keep the US dollar lower. It's become less of a safe haven currency because of the number of COVID cases that continue to rise in the US. And also because the government continues to spend too much money to try to get the economy, to try to stimulate that economy. Next level is probably 90. This is very supportive to a higher Canadian dollar, unfortunately, and that's why you've seen the Canadian dollar recover from the COVID-19 mid-March lows. Chinese buying is on autopilot. There's still lots of skepticism that the sales made to China will not ship, but nonetheless, soybean exports are on record pace. It's even higher than the 16-17 pace, and it should continue through year end, which will help the U.S. soybean balance sheet. Soybean yields are expected to come in lower. The lowest I've heard is Crop Scout Coordinator at 51. At the end of my U.S. ninth year Corn Belt crop tour, I concluded the soybean yield at around 48, 49 around mid-July. But I said that if you can get a good finish, you'll get a record crop. If not, it's something lower. There was no disaster in the making, but it looks like we are headed lower. How low, we'll have to wait and see when the combine starts rolling. But a lot of these numbers have to be confirmed by the USDA. The next crop report is September 11th. Which is next Friday, not this Friday, but the following Friday. 2020 U.S. soybean ending stocks, USDA was projecting 610 in August, but that number is probably closer to 510 when you subtract some acres, as much as 500,000 acres from the derecho storm and some prevent plant acres and abandoned acres. That number could be even lower if demand continues to come in record strong, that's going to add to the sensitivity in soybean futures. The balance sheet can swing very, very quickly on you. So by year's end, this number 610 could be 310. Production in South America looking very strong, record strong as we head into the 2021 growing season. 130 million metric tons alone from Brazil. Some are even thinking that number could be as high as 144 million. When you add Argentina, it's a record crop. However, a weak La Nina is expected to provide dry weather as we start the planting season here in September. Dry weather expected through October, November. And the last time a La Nina hit South America, it took off about 30 million metric tons. So the parts of Ontario, United States, and Argentina have experienced some of the dryness from this weak La Nina. Some are forecasting that this is the start of a mini cycle that could end with a peak in 2025 with the 89-year drought cycle, similar to the Dust Bowl of 1936. So it'll get interesting to see what happens over the next few months with this weak La Nina pattern. Typically, if it does affect the South American production, it can provide another opportunity, marketing opportunity on beans through that February time period. Canadian dollar remains an uptrend. Um, Looking to retest the 2020 highs at 77. That's put some pressure on Ontario basis. You can see the 5-year low, the mid-March COVID-19 fear. Um, but this thing's getting a little overextended. It's still within my upper trading range. It's broken above all the moving averages. Markets sometimes, or assets, can remain irrational a lot longer than you and I can stay solvent. Typically, seasonally, from here on in, the dollar can start to weaken. So I think the highs are in for this year until we get into 2021. But the biggest risk going into 2021 is basis. Now, when the dollar hit that 5-year low in mid-March, soybean basis was positive 305. Historically, that's quite strong. So we took advantage of that. We got aggressive with basis. We left the futures open, hoping for $10 futures, and we might just get that by harvest, which would be beans in the teens. Since then, basis has come down a little bit. Funds buying soybean futures up 184,000 contracts in 6 months. They're now long 109,000 contracts, but you can see from the chart that they can get as long as 253,000. Maybe this year they'll break that, but is the rally over? Because we've had a nice rally from the bottom in April of about 830 a bushel. It can be, but I'm not sure that the funds are done buying, and I'm not sure we're done with lower yields and production and higher exports and so on and so forth. But you're probably ahead of yourself here short term. You can see my upward sloping uptrend breaking above it. It's almost 90 degrees to the top side here in the last few days with RSI at 80. This is more of a sell than a buy, but we are trying to break weekly the 950 and 3/4 level. If we can close again this Friday above that, that's quite bullish short term, and you could see a 993 target. And if we can break that, you could see next spring, summer hit 1143 a bushel. So I'm not going to suggest not to reward the rally, but I'm just waiting for my $10 to see if I can get my beans in the teens. But definitely a nice, we had a target of 10.60 for the last year. We lowered it to 950, $10 because of COVID-19, but we've maintained that, hoping for that Chinese demand to come in, and obviously now lower production, and it's working our way. So thank you for spending some time with us here today. And Denise is now going to open up the questions. If we can't answer all the questions, just make sure you visit us at the e-booth, and we'll more than gladly answer a lot of questions there. Thank you.